The crypto markets don't look too great. Everything is going down, and then the question remains, what are we doing with the assets that we hold? Should we continue holding, waiting for a recovery, or hoping rather that prices recover? Or should we cut our losses here? Or should we potentially even buy more? If we still have some money on the side, should we now buy this bottom? Now, if you watch 10 different YouTube channels, you're probably going to see 10 different opinions on that. What I think is important to differentiate what kind of opinion to potentially follow is, how did that YouTuber come to the conclusion? The central question is, how solid are the arguments? And did that YouTuber potentially do the right calls in the past? Right? Let's say before a bear market, did that particular person say it's time to sell? Now, here's my take on the situation. I try to take away all the subjective judgment. I try to make it as objective as possible using data and using statistics. And one very straightforward way to time the markets, and it's probably an approach you've seen before, is to use moving averages. So the idea is that we want to be in the market when the price is above the moving average. So for example, we take that gain from $250 all the way up to $8,000, and to then be out of the market and the price tends to decline, right? When the price is below the moving average. So we are spared from this 50% correction. This is a pretty straightforward way to time the market, and it does work to a degree. But then the question with this very simple approach is, of course, how well does it work? And is it likely going to work in the future? And is there potentially also a way to optimize this approach? Because when we look at this moving average, right? This moving average in red, this is the 200-day moving average. We would have exited the market over here, then came the COVID crash, and then we would have entered over here. But there's the first problem with that approach. When we look at this particular time in history, yes, we would have been spared from the COVID crash, but we also, wouldn't it be better if we already bought in maybe over here and we got way more of that rally? We first had to recover from the low point after COVID by 65% before buying back in. Now, one straightforward answer to this problem is to simply shorten the duration of the moving average. So let's say we don't take the 200-day, and let's say we reduce this. Then what we see is that over time, this moving average line gets closer and closer to the price action. So as I'm reducing that moving average duration, the red line gets closer and closer to the green line. And once we go to 80, or maybe...
To get the full length video, feel free to simply subscribe over here. Then you get it recommended by the algorithm.